Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson with Martinson Ag, and we're seeing mostly lower prices in grain and livestock futures. A few exceptions in old crop corn right now, but really feels like another risk-off day here. Randy, is this kind of posturing ahead of the Fed announcement tomorrow, or the hangover from the bank failures, or what's going on?
I think it's a combination of both, but probably more towards what the Fed is going to do tomorrow. Everybody's pretty much assured that it'll be a quarter point hike in the interest rates. It's what they say afterward that's probably going to, if they're going to see, continuing increases, or if they're going to take a break and kind of let the economy and let the markets kind of just sort themselves out for the next 6 weeks before they make another adjustment. But at this point, I'd say, it's awful close to that announcement. So I think it's got a lot to do with what the Fed's going to say.
You bet. Another one of those money flow days. In fact, with crude oil down as hard as it is, which is probably a little bit risk off for what you just said, it's amazing that the grains have held up as well as they have, actually.
Well, especially when you look at soybeans and corn, I mean, they've held up really nice. Like you mentioned earlier, new crop or old crop corn is holding up to some with gains. A lot of that is because strong demand for the old crop. In soybeans, we're still looking at a large crop, a record crop coming out of Brazil that's being shipped right now. We're still looking at the idea of almost record plantings in the U.S., but yet that market is holding on. So that tells you that there's a vegetable oil demand or some concerns about whether or not we get all the soybean acres planted.
Yeah, let's talk about soybeans just from the perspective of the fact that you had 19% of the crop planted. That certainly is one of the second fastest paces that we've had in history. So is the idea here, though, with corn planting at 26%, that maybe we'll plant more corn and maybe less beans, or what is the mentality there?
I think that's the thought. I mean, we've been talking about, or we've been seeing the agronomists tell us to plant beans early because it gives us our better yield potential. And I think that's exactly what we've seen in the Eastern Corn Belt. It was a little bit cold, so they went to beans and planting those, giving it some time, waiting for the ground temperatures to warm up for corn. Once they switch over to corn, I think the expectation is that more corn acres will get planted, and maybe in the central to the Eastern Corn Belt, that'll happen. Western Corn Belt and Northern Plains, boy, it's going to be tough to I think, for North Dakota, Minnesota, and South Dakota to get that acres increase that we've been looking at.
Absolutely. The other thing, we had a very strong crush figure out of USDA yesterday on soybeans. And from a technical standpoint, we've actually held support areas in beans that we've needed to hold, right?
We have beans have been very impressive. I mean, like I said, we're looking at the large crop coming out of Brazil, the fact that their basis levels dropped and demand switching over. The soybean market, the U.S. soybean market, has held up very, very well in the face of that. And that's got to mean that, we know we're not looking at increasing stocks big for this year, but it's got to help with our demand. Even though we're not going to China, there's got to be some smaller buyers that are coming in, holding that market together.
Right. You mentioned that the July corn futures held up by strong basis levels. We've got the forward spreads or the inverted spreads working once again here, but December contract has been down several days in a row, I think, except for last Friday. So where do we need to hold here in terms of support?
Well, we were hoping, that the 525 level would hold, but we broke through that. But at this point, I think we're looking at a 505 area. That's kind of I think, the low water mark that has to hold in this market. Once you get below that, you start looking at some of the area crop insurance plans that start to be able to kick in with potential payments at that level. A little early, we're not setting those prices, but I think that's the main level that has to hold at this point in the corn market. Otherwise, we could see this thing drop down into the mid fours pretty quick.
Right. But certainly a tale of two crops here in terms of the corn planting progress with, the South. Missouri's like 80%, but up in the North, you guys have barely turned a wheel.
Well, that's right. And right now, it looks like maybe if we can hold our weather forecast for this week, we might be able to get in the fields at the end of the week. Most activity probably won't start before the 10th to the 15th, because we still have cold temperatures. And, this morning we were 35. We need to get that soil temperature up quite a bit for corn. So it's going to be a while before we start seeing a lot of corn get planted or the planters roll on corn. We'll see some wheat and possibly some beans start going in. But yeah, you look at the states, Illinois is another one that's had some pretty good progress with getting corn planted, but everybody else is holding pretty close to their averages.
Yeah. And like we said, most of the increases that we had projected or USDA projected in both corn and soybeans for this year coming up in the Northern Plains states. So those are kind of in question at this point, aren't they?
They are. I mean, you're looking at an increase of 1.3 million for North Dakota, Minnesota, South Dakota for corn, and 1.2 million for soybeans for those three states. And we haven't turned a wheel, and we're looking at it being the beginning of May. It's going to end, plus having to plant all the other crops here, hopefully by the end of May or by the first couple weeks of June. So the next 6 weeks are going to be very busy for producers up in the north.
You bet. All right, new contract lows again today in the wheat market. The funds have been relentless sellers there. And of course, we have more rains expected in the Southern Plains. But how much good will it do at this point, Randy?
Well, we noticed that the big rains that came last week didn't help the Kansas crop at all, as that went backwards last week. We did see some improvement in Oklahoma, Colorado, and so it helped in some of the regions. At this point, I think this market is just trying to find a bottom, and where it stops, it's going to be a good question. We're starting to see combines roll in the deep parts of Texas. We'll see what kind of yields that they come with as they'll start to move to the north. But at this point, where it stops, right now they're discouraging planting of spring wheat, and if that's something they needed to do, I guess it is.
Yeah, and the funds are so short in Chicago, it's just hard to believe they can push this thing any farther.
Well, that's right. And it seems like now we're seeing more of a race to who's going to be in the feed ration between corn and the Chicago wheat. We're starting, I think right now wheat is really becoming more of a feed than it is a milling quality, just because of where the price is at in comparison to corn.
No, that's a really good point that you make. Okay, hogs and cattle both lower today. Is that part of the risk off, you think?
I think it is. I mean, technically, we needed to see a pullback in the cattle markets. We've been waiting for a, $5 to $7, $10 drop in that market. It seems to be what they kind of do. And since, we saw the cattle on feed report come out, the market has been kind of tired. It looks like it's been wanting to sell off, but it just hasn't been able to. And now I think, with the Fed and with their action tomorrow and with the crude oil markets and some of the other markets lower, I think it's making it a little easier for cattle to make their correction.
Yeah, definitely a risk-off environment in both cattle and hogs today. But we also have a different situation with hogs. You've got a premium with the futures to the cash. And the flip side of that, cattle have a discount to the cash. And so futures can't fall too far in the cattle here, do you think?
No, they can't, and I don't expect that they will. I would expect a decent sell-off, just kind of a correction. I do think that we'll see the cattle markets come back, and I don't think we're done yet. We still have the tightest supplies left to go through. The biggest question is going to be once these higher cash prices, the box beef starts hitting the grocery stores from the higher bids that were paid by the packers in June. That'll tell us that the consumer demand continues to be at the pace that it is, and that'll tell us that this market can hold gains.
You bet. And right now, with corn prices pulling back, are you suggesting end users get some of these feed needs lined up?
Oh, I think that's a good point. I mean, right now that would be a good time, especially for for the old crop. I think you should be looking at buying old crop for any needs you need before the new crop becomes available. Because at this level, basis, I think supplies are still fairly tight. I do expect July will try to, close the gap up to May and try to, rally a little bit to get a little higher. So I would cover any of my summer needs at this point.
All right. Thanks for joining us, Randy Martinson with Martinson Ag, and that's Markets Now.